A warm welcome to you, the listener. Thank you for coming to watch the video today. We're jumping right in. We're unpacking the CoStar Group Q4 and year-end 2025 earnings call.
Yeah, and let's start with a quick summary of their prepared remarks before we get into the Q&A,
Okay.
because the financials they reported are, well, they're pretty staggering. Record full year 2025 revenue hit $3.2 billion.
Which is a 19% jump, right? And that marks their 59th consecutive quarter of double-digit growth.
Exactly, 59 quarters. And adjusted EBITDA soared 83% to $442 million. Plus, their 2026 guidance projects revenue landing somewhere between $3.78 and $3.82 billion.
Right. And strategically, management noted the commercial real estate market is steadily rebounding. So CoStar is heavily investing in homes AI and international expansion places like Australia and Europe while utilizing their new reporting segments, which are simply commercial and residential.
Which perfectly set the stage for a really intense Q&A session. Let's just run through the analysts' questions, because there are a lot of them. Stephen Sheldon from William Blair asked about Q4 bookings and sales productivity.
Right, and management responded that reps actually hit peak productivity in year 5, and Q4 saw the second highest net new bookings in company history. Then Ryan Tomasello at KBW asked about Apartments.com growth and navigating the MLS industry upheaval.
CoStar's response was that they are perfectly positioned to capitalize on those industry shifts by aligning with agents and sellers. Next, Brett Huff from Stevens asked about commercial investment priorities and the Matterport cuts.
Yeah, they removed $120 million in duplicative Matterport costs, and they are heavily investing that capital into new technology and international markets. Pete Christensen at Citi then asked a big one whether AI threatens commercial real estate brokers and CoStar's pricing.
They pushed back hard on that, stating brokers are relationship-driven and safe from AI replacement. Plus, CoStar relies primarily on institutional owners and banks anyway. Then Curtis Nagel from Bank of America asked to disaggregate commercial margins.
And the response there was that organic margins remain flat, with only temporary slight impacts from integrating recent acquisitions. Andrew Boone at Citizens asked about early results for Homes AI.
Management noted Homes AI is driving 4 to 7 times higher user engagement, so marketing is actively shifting to highlight those product features. Then Scott Wursel from Wolfe Research asked for specific residential booking numbers.
Which they kind of rebuffed, right? They wouldn't give specific numbers, but emphasized a tremendous overall growth trajectory. Greg Huber at Huber Research Partners then asked about Apartments.com margins.
They answered that marketing spend remains predictable, and they are actively taking market share from failing competitors. Jeff Silver from BMO Capital Markets asked about capital allocation and M&A.
And CoStar said they're focused primarily on their new $1.5 billion share buyback and massive internal innovation right now. Jimmy, stepping in for Jason Haas at Wells Fargo, brought up residential profitability timing.
They explained that marketing is front-loaded in Q1 thanks Super Bowl ads, so margins will rapidly accelerate throughout the year. George Tong at Goldman Sachs asked about M&A contributions in the 2026 guidance.
The company clarified that guidance only includes the full-year run rate of their 2025 acquisitions. Nick Jones at BNP Paribas asked how CoStar defends its data moat against AI web scrapers.
This was a great response. CoStar's massive proprietary data sets sit safely behind authentication walls, meaning they are completely inaccessible to AI crawlers. Finally, Ashish Chabra at RBC Capital Markets asked about post-2026 commercial margins.
And they expect steady margin expansion from 2027 to 2030 following this intense investment phase. Zooming out for a high-level wrap-up, the main theme here is that CoStar is successfully marrying an unscrapable proprietary data moat with cutting-edge AI.
Absolutely, and that unique combination is fueling aggressive global expansion and massive revenue growth.
Which leads to our final thought for you to mull over today. AI is ultimately only as powerful as the private data it can access. What other traditional industries are sitting on hidden, highly valuable data gold mines?
That is the billion-dollar question.
It really is. Thank you for watching. Please click like, share the video, subscribe, and stay tuned for upcoming content if you liked the video.